make sure that applies to you in your particular state. I am thrilled to be on this call. I love teaching my fellow business owners about business law. I believe that knowledge is power, and my goal in life is to plant the little seeds of knowledge about how the law can protect us all here and there, and see how the seeds of knowledge sprout, and then eventually I see people use that knowledge and become more powerful in their businesses because they know what to ask for. They know what their rights and responsibilities are, and there's nothing more gratifying, absolutely nothing more gratifying to see people use the power of the law to their advantage. So this is what this call is about. I am here to talk about the difference between corporations and LLCs and what that really means to you as a business owner. I just wanted to tell you before I start going into the content here, which there's going to be a lot of that, a little bit about myself. I started my own business, which is my law practice, a little bit over 2 years ago. I started my business because, for a lot of different reasons. I guess the first one was control. I really just wanted to control how I did things, what I did, the clients that I worked with. And I wanted to build something for myself. I wanted to build something that would be long-term, something that I would pour my passion and heart into, and that would not be taken away from me. This comes from a somewhat sensitive and vulnerable place for me because before I started my own practice, I poured my heart and soul into being an associate, a capital markets associate at a large firm. I did huge transactions, worked around the clock, and I really loved it. I loved it. I did my best, and I didn't become partner. It was somewhat a crushing experience. I wanted to be a partner real bad, and it didn't happen for me. It's probably for the best now in hindsight, but what do we know when we are there in the moment and learning the news that, well, it's not going to happen for you. The economy just cannot support yet another partner in the IPO department, and when no IPOs are happening. Be that as it may, that was my hard journey to starting my own business, and ironically, when I was trying to figure out the right corporate business structure for me, I couldn't figure out what it was. Because in New York, we have partnerships, we have limited liability companies, and we have regular corporations. And to complicate it all, everybody else out there is talking about C Corp, S Corp. They're talking about PLLC, which is Professional Limited Liability Company, PC, which is Professional Corporation. So many concepts, so many different ideas to grasp and understand. And here I was a lawyer. I should have known this stuff. And the truth is, in the place where I practice law, there was no variation. All we ever had was a regular corporation, which is what basically something you see that says an ink at the end. So I had to figure it out for myself. And yet another humbling truth is that I couldn't figure it out right away. I read the law, I went on the internet, and I could not figure out the exact I still could not figure out what was the right business structure for my law partner and I at the time. There was two of us. We were going in 50-50, and we still did not know, should we be a corporation, should we be shareholders, or should we be an LLC or partnership? Because, ironically, there was at the time still a lot of partnerships out there. I asked my accountant. He gave me the tax point of view. I'm like, okay, well, that's helpful. Then I asked my merger and acquisitions people, the people who are supposed to know this, and they're like, I don't know, it depends. That's a total lawyerly answer that drives me crazy when I need a clear answer, but I also sympathize with them, and I know it does depend most of the time. So I just made a quick decision. Okay, this is just going to be very simple for us. We're going to be an LLC, and we'll make it work. But as we went along, so as I said, we've been in business for slightly over 2 years now, I actually did figure out the answer. I now know exactly what to explain to my clients when they ask me this question. And, well, frustratingly enough, the answer still is depends, except that I don't leave you hanging. I really do walk you through, in your particular situation, I ask a few questions, and then it kind of becomes very clear in each particular scenario what is the right answer. So that's the story of how I got here and who I am and why this topic is so dear to my heart, and it also explains a little bit why I would try and have this topic covered in live workshops and teleseminars, and basically talk to whoever would listen, whoever wants to listen about this. So here we are. Talking about incorporations. So I'm just going to pause for a little and get a little drink of water here. And I'm going to get to my first slide. And if you can't see slides, if you could just drop me raise your flag or give me a quick shout. So, to go back to the agenda for today. In this workshop, we will talk about the various business structures that are available to a business owner in New York. We will also talk about what the requirements are for each of them. And then we will talk about benefits and drawbacks of choosing a limited liability company over a regular corporation. Lastly, I will mention this new, very fascinating hybrid of an entity. It's called benefit corporation, and how it's different from a nonprofit and how it might be applicable to you. We are going to cover a ton of stuff. I will do my best not to overwhelm you with content. And even though there is going to be a good amount of time for us to cover a lot of different details, more likely than not, you will be left with a question. Okay, now I know what the basics are, but how does that apply to me? That is where the job of a lawyer comes into play. A lot of times, people may know the law in general because they heard it said on television or they saw the statement of law online. There's no shortage of those kinds of statements out there. But then the art and craft of a lawyer comes in explaining how the law applies to particular facts, how the law applies to you and your particular needs. And that's why I will make an offer to the first 5 people who signed up to have a consultation with me, to have a consultation to discuss what particular entity would be the best choice for you in your business and how we can work together to make it happen. I strongly believe that incorporation is one of the most necessary steps that a business owner should take in formalizing and kind of protecting legally the business and the ownership. And I am there to do that for you and help you out in that process. So with that in mind, let us start with the learning, my favorite part. So in New York, what are the various business structures that you can have. We have something called corporation. Corporation is one of the older legal creatures. And when I say legal creature, it really means that the legislature got together, our politicians, they sat together and they created a statute. They wrote a statute saying, from now on, people should be able to create corporations. And those little corporations, I call them babies because they have a life of their own and they're kind of alive, and they also happen to live longer than normal human beings. But they're separate. They have their own separate identity. So the politicians got together and created a statute that there will be corporations and they will have their own money, they will have their own rules by which they live, and we will regulate them. And the purpose of creating corporations was to allow people to basically compartmentalize, to break up their complex business and financial affairs into little vessels. So let's say if you were a dynamic business person who had a lot of different things going on, separating your business streams or various enterprises into corporations allowed you to keep them separate so that there was no spillover among the containers with respect to how to keep track of finances, how to keep track of who owes what. It also allowed you to split your business venture into perhaps one line of business. You would have investors and, a lot of different joint venture partners, and one business you would just have for yourself on the side, and you would be a single owner. And this way, everything was kind of separate and not confusing anybody, and it allowed dynamic, basically, in my world, rich and wealthy business owners to keep things on separate tracks. So this is one of the good examples of where the law was really on the side of business. They recognized the need for creating a vessel that allowed people to keep things separate, and they did it, and they did it really well. Corporation law, as I said, is a fairly old concept, and the idea is we're creating an entity that will be separate from the identity of its owners, meaning the physical people who put up the money to create this entity. And in exchange for keeping it separate and sort of giving it all these special rights, one thing that the legislature asks us that you respect the formalities. If you remember anything about the seminar today, is this: that formalities are very important with respect to corporations. And I will repeat this over and over throughout the seminar again, because this is something that comes up in my practice day in and day out, that people are just very, they cut corners and they don't do what they're supposed to do, and the law doesn't even ask for a lot. There's really not that much to do with formalities, but here's the deal. There's not much to do if you don't do that little that is really just held against you. So the plea and the favor I ask of you, if you do choose a corporate entity, please respect the formalities, and that will keep you, really, that will just be the only thing that you need to do. And what are the formalities? For the corporation, they're a little bit more. For the limited liability company, they're a little less, and we'll go more into details. And formalities, when I say formalities, it really means written stuff. What has to be in writing? And what procedures do you have to have in place? That's really all there is to it. Just, have your procedures and have your stuff in writing, and you're probably going to be okay, because that's what the law asks of you, at least on the corporate side. So, corporation. Corporation is an old entity, and the way they generally work, they're very vertical. You have shareholders owning the corporation. In the middle, you have the board, which supervises the managers, but is somewhat hands-off and just deals with big issues. And then you have managers and the employees, and They run the day-to-day affairs of the corporation. And subordination goes like this. Shareholders elect the board of directors, and they also get to vote on major corporate events, whether it's the dissolution of a company or sale. But overall, throughout the year, they keep their hands off. They're not involved. The board of directors is much more involved. It has more involved duties in a sense of supervising and making major business decisions. And again, the managers, they implement those decisions day in and day out. Now, limited liability company is actually not as vertical. More often than not, your limited liability company has just one class of control, which is the owners. The owners who also happen to be managers of the company who run it day in and day out and make all the decisions about how small things should be done and how big things should be done. If you want to structure your limited liability company in any other way, you have to say so. Partnerships are becoming increasingly obsolete, and there is a reason why. When you're a partner in a partnership, by definition and by default, unless you negotiate otherwise, you are held to a very high standard. You owe a so-called fiduciary duty to your partners, meaning when business opportunities come up in front of you, you actually have to keep the interests of your other partners in mind before you make a decision or take advantage of a business opportunity that comes to your place. And for most business people, it basically means they have to put partnership before themselves. And a lot of times that is a very, that's not a result that a lot of people had in mind when they started partnerships with people, especially the ones that are not formulated on paper. And it's not the result that in this day and age most people expect. In this day and age, there's not as much in terms of gentleman handshake. There's a lot more sort of a recognition of the fact that most people negotiate for themselves and kind of try to keep their best economic interest in mind. And so having a partnership is really not what most people have in mind. And I always try to alert people to that, especially on the exit side when people try to dissolve their business ventures. There's some very unattended and very, drastic liability outcomes at the end because separating personal from business becomes quite difficult. And here's my last form of business entity. We call this sole proprietorship. Sole proprietorship is not an incorporated entity. It's not a creature of statute. Really, it's just a person who is taking money out of his or her pocket, putting in a business venture, perhaps opening a store or providing services, and deriving income directly by providing sort of services or products on its own behalf, in its own name, without any separation between its personal or business assets. Very simple structure. For a lot of people, it's basically the right structure to start a business and until they figure out what the right way to go is. And, it's also, there are certain protections around that, not in corporate law, but in other areas where, just because you're sole proprietorship doesn't mean you're on the hook for everything. So, there's, as I say, there is room for that particular entity for some people. So when you think about which entity is right for you, one of the things that I address with my clients is what's going to be the management structure of the business. Who is going to run it day in and day out? And this is my first bullet. Like, what will be the nature of your business? That really determines the complexity of management. The more complex, the more likely it will be that it will be a regular corporation. But if you have people who are going to be running the day-to-day operations together, the owners equally involved in the business, then LLC might be the right outcome. This day and age, I don't recommend limited partnerships to people, even though they provide some limited protection. They're the formalities are somewhat outdated, and people are becoming less and less sort of familiar and comfortable with those parameters. Now, another factor, of course, is how many people are going to own your company. And this is why we would ask that question. If you have a lot of investors who are going to be somewhat passive, meaning they're not going to be engaged in the day-to-day operations of the company, the corporation probably will be the right outcome for these people, because the corporate law treats owners fairly uniformly, and it's evolved in a way where shareholders know exactly what their entitlements are and how many shares they own, and calculating percentage of ownership of the company is fairly easy, and transferring ownership on the books and records is fairly predictable. That is not the case with a limited liability company. So if you have a lot of owners, you're going to have really difficult time tracking them if it's just all confined to an operating agreement. And that's why I steer people away towards a corporation when there's a lot of owners involved. Another factor to consider is the business vulnerability to lawsuits. And this really is a factor to consider for people who are right now sole proprietors, meaning they obviously conduct business activities, but they don't know whether or not they should incorporate. A good example would be there are people who are business consultants, and from what I understand and from the experience that I have, they don't get sued that often, and they usually don't have large liabilities outstanding, because their job is primarily a retainer to provide advice to somebody on how to do things. It is fairly easy for them to fulfill those obligations and do not have any outstanding disputes or claims with their clients. And a lot of these people choose not to be incorporated. I have to say this is probably, or let's say you're an artist and you create some kind of artistic stuff for people, and 99% of the people are happy with the stuff that you do for them, so you basically make a determination that there's never ever a chance for me to be sued, and therefore basically no need to incorporate. Now, for artists, there still could be a reason to incorporate, to warehouse basically the artwork and so forth. But the only example that seems to come to mind in terms of for whom sole proprietorship might be appropriate is potentially a business consultant. For all the other people, for all the other service providers out there, and then particularly for people who sell goods and who are in commerce, incorporating definitely might make sense to limit business liabilities to business and personal, assets and liabilities to just personal. Another factor to consider, of course, is tax implications, and that's somewhat a separate topic, which I will touch upon a little later, but I really am going to make an effort not to confuse you and not to conflate tax treatment and corporate structure, because that's a very confusing topic. And also another important factor to consider whether or not to incorporate is how are you going to raise money for your business. So if you contemplate getting outside investors, people who are just going to give you money but not give you, not going to be involved in day-to-day operations of the company, a regular corporate structure will probably be required, because for most outside investors, they are more comfortable with being shareholders as opposed to members of a limited liability company. So these are the factors, and again, when you work with a lawyer, they usually walk you through these factors just to make sure the choice of entity is right for you. All right, let me just pause for a brief second and get a little bit of water. And meanwhile, I want to ask you to jot down, now that you have a little bit of a framework, I want you to go ahead and jot down so for the next couple of minutes, what are your top of mind issues in terms of trying to decide whether or not to incorporate, and what do you think are your top vulnerable spots are in determining what might happen to your business? What do you think might be sort of an adverse scenario which would make sense for you to potentially, separate business and personal, make sure that you have that clear line drawn. So I'm going to give you a couple of seconds to do that. Meanwhile, I'm going to get a drink of water, and we're going to resume. All right. Well, I hope this exercise was helpful. I hope you jotted down some helpful thoughts that you might potentially, or questions that you might have for me. And I do encourage you to tag those questions for me, and you can either email them to me directly at info@rovo-law.com. You can call me directly, because I do believe that this learning and this visibility that we're doing for your corporate questions would be really helpful for you. So now that we consider the factors, I wanted to drill down on something that is not exactly very obvious to people, and I want to really explain this clearly to you. Why do people need to incorporate? Why do I need to incorporate? It's one of the most frequent questions, and it's really not that obvious, because what you have on the internet is not exactly correct. They say that incorporation gives you tax savings, and in my experience, that's not necessarily always the case, and it really incorporation is really it's really about limiting liability and not about tax savings. So I just wanted to be very clear about that. But speaking about liability, this is the kind of word that I throw around all the time, and I really shouldn't, because it's not really that common to the people who do not practice law, and I really want to pause and explain. When I say liability, it really means an obligation, a debt, basically a minus that's going to may potentially come out of your pocket. So if you were to think about liabilities, any stuff that can take stuff away from you, or it's anything that could be considered a somebody's claim on your resources, like somebody comes back to you and says, oh, you owe me for money for the sessions that I didn't attend if you're a coach. Or let's say if you are a law firm like us, somebody comes back and says, oh, and by the way, you have a deposit that I decided to change my mind and I don't need your services anymore. So that's a liability for us. So expenses also for any kind of business. So let's say you charge things on a credit card like paper, printing supplies, and until you pay for those expenses, they will be listed as liabilities. They will be listed as minuses on your balance sheet, and that's what I mean when I talk about liabilities. In the long term, what I call liability is any potential claims that people may have against you. Some of the stuff you already know about your business, you know who you owe money to, and sometimes you don't. Because, and this, again, that's not a very popular topic. That's not something that people like to hear about. But there are crazy people out there who sometimes can sue you. And they can come up with strange claims and strange ideas of why they think you might owe money. And sometimes they're not crazy, and sometimes there's been a misunderstanding and you think you did everything right and they don't think so. And it happens to the best of us. It really does. And that, even in best case scenarios, sometimes people end up having lawsuits in their hands. So again, there's potential or real lawsuits, even if nothing has been decided by court, that could be a claim, that could be a liability. And what does that really mean? What it really means is that when the liability becomes an obligation, where basically somebody has determined that you owe somebody money, whether you agree to it or the court said so, and there is an actual dollar amount attached to that. So let's say under the agreement you said you will pay somebody $10,000 to use the space. We call that a lease. So you promised the landlord you pay $10,000 for using this space, and then the year did not go over so well. You don't have the money to pay. What happens? You tell the landlord that you don't have the money, and the landlord can either settle with you and say, okay, give me what you have and I will discharge you from any other claims, or the landlord says, find the money. You're still on the hook and I am going to file, a lawsuit against you, and then if I win, then there will be a lien against you. And that's what happens with big boys and big corporations, big girls. In big commerce, that it's not personal. People sue on contractual obligations all the time. It's a standard operating procedure, and in fact, the principle being, if somebody owes the money to the corporation, you can't just say it's okay, you don't have to pay me. It's not your call to make. It's not your money. You owe it to the shareholders to track and to make sure that whatever debts are outstanding, they're actually paid on time. And the only way to collect on the debt in this country is to either make arrangements with a debtor for a partial payment over time, or to force the debtor to sell all of its property to satisfy the claim. And the way to force the debtor is to obviously file a lawsuit against him and then get the judgment and execute on that judgment. It's a very complex process, and I mean, it's very tedious, and there are specialists who do that, but that's what happens. So if you owe somebody money and you don't pay them right away and you want to walk away from that debt, it's not a good situation, but you actually can do that, and what the person would have to do, your creditor, they would actually have to sue you. And there's been a time right after the financial crisis when creditors let a lot of debtors walk away and they didn't sue. Really, that actually did happen. People were able to walk away from their liabilities, and the creditors, like the banks and other corporations, they just kind of like, what are you going to do? Everybody's deadbeat at this point. We will spend more money litigating than collecting. It's not happening as much anymore. There's a much stronger enforcement and collection and judgment situation going on right now. So that is why, again, this probably is one of the reasons we're having this conversation, is that incorporating yourself right now and insulating yourself from potential business claims is ever more important, because more likely than not, if you were to become unable to pay your debts as they come due, you will not be able to walk away from them. But even so, like even if you were to try to walk away under normal circumstances, you can't walk away without letting your creditors know. And then if they don't agree that you walk away, then you have to file for bankruptcy. Otherwise, it will always be hanging over you. Those liens, they will be there. On the business. Yeah, on the business. And for the unincorporated of you out there, those claims will hang on you. They will be attached to your house, to your bank account, and to everything else you own. And that is why people incorporate. So I just wanted to slow down and say it again. Let's say we're in that very remote scenario where there is a claim that you cannot pay. If you're incorporated and did everything else right, you can walk away from your business debt. If you're not incorporated, you cannot walk away from your business debt. That's just how it is. Let me repeat this again. If you are an incorporated entity, meaning you have an LLC, you have a corporation, and you've incurred a debt that you cannot pay, you can file for bankruptcy, and you can walk away from that debt. It will not, unless you sign personal guarantees, it will not transfer into your personal stuff. If you are not incorporated, if you're a sole proprietorship, or if you are, a lot of people say, oh, I'm a DBA. Well, that's also not incorporated. If you're a general partnership, again, you're not incorporated. If you're one of those three things, sole proprietor, DBA, general partnership, your personal assets are going to be on the hook for unpaid debt. Unpaid business debt is going to be hanging over you. For a lot of people, that's not an issue. They say, I will always pay my obligations on time. It's not going to happen to me. There's no reason to incorporate. I respect that. That's your choice. That's the risk you can take. Nothing says that you must incorporate. But if the choice for you is to be less risk averse, then definitely at that point, incorporation is the right strategy. But for the not risk averse people, for people who, sort of are okay with having that risk, no problem. Or for people who think that there's a very low risk of exposure, that's fine too. So in the end, incorporation is about risk management. Really, that's what it's about. It's about identifying the risks that might be applicable to your business, identifying the potential for you being sued for an amount that you don't have in your business, and for you making judgment whether or not you want to have your personal assets on the line to potentially satisfy business debts. That's all there is to it. You determine what your risks are, you determine what potential obligations might be, and you decide whether or not you want to be personally liable. That's all there is to it. And it sounds simple, but there's layers and layers and layers of analysis for that. And I find that having an incorporation discussion is actually much more interesting with people who have been in business for a while and know exactly how their client relationships evolve and what actually happens in their business and what kind of pressure points come up. And at that point, this conversation becomes much more meaningful. And I hope the ones who are on the call today actually already can relate to this whole dilemma much more meaningfully and not so academically as it might sound. Okay, so let me just grab a few seconds here to get a drink of water. And meanwhile, I encourage you to review your notes and maybe jot an additional couple of questions on the margins for me. All right, we're back. So now we're kind of inching and sort of zeroing in on the whole crux of the matter. So what's better for me? What gives more protection, limited liability company or regular corporation? My answer to you is it's the same level of protection with the big qualification, assuming you do everything right. So if you have your corporation and you follow the rules on how to maintain corporate formalities, you're going to be okay. And if you have a limited liability company and you follow the rules for how to maintain formalities for an LLC, you're going to be okay. Meaning, and what do I mean by being okay? If you want to file for bankruptcy and to walk away from your debt, you should be able to without dipping into your personal assets, because that's the kind of protection we're talking about here. Now, let me just clarify and let me just slow down a little bit on the what does it mean formalities, right? Formalities are the things that you do that are prescribed by statute. For an LLC, actually, no, my slide is here for requirement for a corporation. So for a corporation, what you have to have is you have to have at least one shareholder. And what do the shareholders do? Shareholders own the company. They own the company, and at least once a year, they have to elect a director. If you are a single owner of a corporation, then you can be, one shareholder electing one director, probably yourself, and then electing the managers if you choose to. Another thing shareholders do is adopt the bylaws. What is the bylaw? The bylaw is a constitution. It's a document that tells people how the corporation is governed, meaning how often people vote on things, who can vote, what does the board of directors do, and it talks about all the different meetings, procedures, and all the nitty-gritty stuff like that. It's not a public document, but you must have it. And then a corporation gets formed by filing certificate of incorporation. Actually, I have a typo on my slide. For a corporation in New York, the right document, there's something that's public. It's called certificate of incorporation. And in that document, what you have to do is indicate who the owners. Oh, you don't have to no, certificate of incorporation, you don't say who the owners are, but you have to say how many shares are authorized and what the name of the corporation is, and that's pretty much it. It's a very short document, but you must have it. Now, another thing for a corporation to have is to have regular board meetings, at least once a year. The board of directors, or if you happen to be a single owner, the director adopts a resolution confirming the major decisions, whether it being auditors of the company or the bank or whatever issues come up, and approving potentially manager compensation, maybe issuing additional shares, things like that. Those things have to be written down in minutes. And that's another requirement that an LLC law does not have, that major decisions have to be written down in minutes for a corporation. And that's what gives people a lot of pause. That's where people become a little nervous. Like, why should it be a corporation? It just seems so many formalities, and especially like the minute stuff. Full disclosure, I still, to this point, I dread drafting minutes because it's a kind of document that you cannot write freestyle, and it's the kind of document where you have to put just enough to give the general outline and sort of description of the corporate authorization, whatever it is that you're allowing the company to do, and give its officers very broad authorities to implement that particular action. And you're writing it with a hindsight of, let's say if somebody else later were to say, oh, what this officers did was never authorized, you have to make sure that the language is specific enough and broad enough to satisfy all sorts of different people with the hindsight. And that's why it's not exactly my favorite document to draft, but again, there's rhyme and reason to it, and I have plenty of forms, and so I obviously do them all the time. And I teach people, as soon as I form a company, a corporation for somebody, we draft a few organizational minutes, and we do a few samples, and then I say, okay, do you get it now? This is how you do resolutions going forward. He was like, okay, fine. Some people are better at it, and some people are not so great about it. I do try to check in with my corporate clients periodically to make sure that at least once a year they have some kind of resolutions, at least sort of memorializing any kind of major decisions, so that they have a track record of directors being, fulfilling their roles and responsibilities. And why do we do that? This is why we do corporate formalities. Again, this is all with the benefit of hindsight. First thing is, this is for a situation, having a clean corporate book, meaning all your resolutions drafted. This is for the situations where you want to sell your company and the potential buyer says, I want to check your books and records. Why do they want to do that? They want to see who the owners are, and that's usually reflected in the corporate book. There are share certificates, supposed to be written out by the responsible person, and they want to see those resolutions, and they want to make sure that whatever actions the company took were actually they were properly authorized, and there was nothing in the books and records to indicate that the company is not doing things improperly. So having a good corporate book gives buyers confidence that they're buying a clean book. And that's why having it is a tedious thing to have, but it's a great factor in establishing the value of the company. Another good thing about corporate formalities is that let's say if you were to obtain a loan from the company or get investors, they are also going to be asking you for resolutions for various corporate actions. And that, again, is a very good thing to keep in mind, and that's what you should do. You don't have to do as many formalities for an LLC, and that's a wonderful thing about that. For an LLC, because the presumption is that the managers are also owners and that they talk to each other and they have authority to make decisions on the spot, very little of it has to be written down. Moving right on. So as I said, there's no need for an LLC. There's no need to write anything down other than potentially in emails, and it is very important to for LLC members to, if they're 50-50 owners, to communicate their decisions to each other, because they're basically they have the authority to bind the company individually without talking to each other. So that's something very important to have. And then I'm just looking at my slide, and I realized that against my better judgment, I do have tax issues thrown in here, and I'm going to make an executive decision and not talks about tax treatment and tax benefits of LLC versus corporate here, because that will be slightly confusing. So I'm just going to move on to my partnership slide and just reiterate that general partnerships are rarely used and really should not be used because of that pervasive fiduciary obligation that you have towards your partners. And so I strongly warn you against starting business ventures with other people and not incorporating, because they can come against you for taking their business ideas away and thereby somehow breaching your fiduciary duty. Just whenever you try to do a business operation together with somebody, that is one of the clear scenarios where incorporation is super important, because you actually will free your hands if you incorporate as opposed to, and this really sounds very counterintuitive, but really if there's more than one person in business, incorporation is not even an option. It has to happen, otherwise you guys will never know who owns what and what the rights and responsibilities are. Now, sole proprietorship, as I said, there's no